Hi, everybody. Welcome to the panel on hydrogen, carbon capture, and industrial scale decarbonization. Got a very diverse panel of perspectives up here today. I'll start by introducing myself. I am David Daly. I lead the power practice for Burns & McDonnell. We are a 120-year-old engineering and construction firm, very much involved in all forms of infrastructure. Buildings. We're very much in data centers, and crypto has been very interesting lately. Our legacy Houston office, very much in the oil and gas space, because of course it is. And they are actively pivoting to green diesel at the moment. We had a very active transmission and distribution practice because many of you in this room are building things out in places where there's no human beings, and so thank you very much. I started talking to Burns & McDonnell about 5 years ago about joining with them. I had spent most of my career, 22 years, developing plants and managing plants, and I got an itch to start building some things. And in fact, we are now very much pivoting into solar and batteries. Right now, I think I can say this with honesty that we are currently building the world's largest battery storage project. Give it a couple days and that won't be true anymore, but I'll take credit for it while I still can. And before I tee up the guests, I'll tell you a little bit of story relevant to the broad topic of today in terms of people. I started with just myself in, 2016, 17, and had a vision of what I believed I was going to be building. And at the time, I wasn't ignorant to the fact that there would be solar and batteries, but I definitely wasn't prepared for the speed and the scale that occurred. The Paris Climate Accord in 2015, the U.S. didn't sign on to it, but the wealth of the world did sign on to it. The pension funds, sovereign wealth funds, insurance companies, banks, the real wealth in the world said, we're going to do a lot less of this and a lot more of that. And things happened very fast. And from a people perspective, I think it caught us off guard. The developers have a lot of projects out there that are ready to go. And from my perspective, as the builder, designer, and builder of things, and from them as the developer, owner, operator of things, not enough people. They were able to develop more projects than there are people. And I'm building a group. I'm trying to hire people with requisite skill sets. They're trying to hire people with requisite skill sets. And the number of people with, solar batteries on their resume is not that big, and certainly not big enough. We have to solve the problem of bringing people into this industry. All right. If I were to go and hire somebody from one of my competitors, it's fine for me, but it doesn't really change the world very much, right? We're just rearranging chairs on the same boat, and it's time we have to build a bigger boat. And how do we do that? Houston is swimming with talented people that do very complex things, but we have to offer them a path in that looks meaningful and lucrative and long-term, right? And so, on my side, I have to hire people and know that training, mentorship are part of what I'm going to need to offer them, in addition to being able to explain how this career path is going to be meaningful and long-term for you. And so that's an investment. Hiring somebody with 20 years of experience is great because you can kick them out into the field and they go on day one. But to train and bring in new people, there is a cost associated with that. And so we are very much embroiled in that right now. And so, I'll get off my soapbox, but, my message is we've got to build a bigger boat here. And with that, I will introduce our panel. First, to my left, we have Zach Scott. Zach leads Mercuria's North American environmental team, which is comprised of industry veterans from oil majors, banks, NGOs, and carbon and biofuel project developers. The North American product lines include offsets, biogas, differentiated energy, and compliance and voluntary markets. Jane Stricker had a long career at BP, where she had multiple roles in capital projects, finance, compliance, and outreach. Just 4 months ago, she became kind of the tip of the spear for Houston as the executive director of the Houston Energy Transition Initiative and senior vice president, energy transition for the Greater Houston Partnership. And at the in the middle, we have Pradeep Venkatamaran, Dr. Pradeep Venkatamaran, Senior Manager of Mitsubishi Heavy Industries. Pradeep has strong domain knowledge and industry experience in low-carbon value chains such as hydrogen and ammonia, greenhouse gas mitigation, and carbon capture. He serves in leading roles managing projects and cross-functional teams interfacing with top management, major international clients, consultants, and technology developers. Entrepreneur seeking and developing new ideas to help businesses and assets differentiate and provide value to internal and external stakeholders. I got through that, all right. All right, so I'll tee up you guys. Jane, let's start with you. Can you kind of discuss the vision of the Houston Energy Transition Initiative and your implementation strategy?
Yeah, absolutely. Thanks, David, and thanks to Real and Kay for the opportunity to come speak with you all today. I'm really excited to be here. It's been my career's been an incredible journey. I learned a ton in my time at BP, and I'm so pleased to bring that experience to the Greater Houston Partnership. As many of you know, the Greater Houston Partnership is the economic development engine, so to speak, for the Houston region. We have about 900 member companies, and as you would expect in the Houston region, a large number of those companies are energy companies. Bobby Tudor got up at the annual meeting a few years ago and said, it's time for Houston to step up and take advantage of the opportunity and also take responsibility for leading the energy transition. And at the same time, many of the big industry players here in Houston were coming forward and making their same commitments. And so the timing worked really well. And a fair bit of strategy work was done to understand what are the implications for Houston in various iterations of the energy transition. And what we realized was that if Houston doesn't take advantage of this opportunity and leverage our leadership in the energy industry, we could lose a significant number of jobs. And by that we mean, anywhere from 500,000 to 1 million jobs from Houston. But on the other side of the coin, if we really do lean into this transition and the industries that are here and build that ecosystem that can enable growth and development through the energy transition and position Houston to be that leader in energy in the long term, not only will we not lose those jobs, we'll grow this economy even longer and add upwards of 500,000 to 600,000 new jobs over time. And so that's where the Houston Energy Transition Initiative got its start. And so we've got about 20 companies in the partnership who have stepped forward and made a 3-year commitment to fund this initiative with a focus on sort of 3 key domain areas. The first is around jump-starting those technologies where Houston can really take a leadership position today. And those are really around some of these decarbonization topics that we'll talk about here. Things like CCUS, things like hydrogen, things like battery manufacturing and energy storage, and circular plastics. Houston is home to 44% of the country's petrochemical activity. So there's a huge opportunity for us to decarbonize that activity, but also think about sustainability and long-term impact on circular plastics and that circular economy. So that's the first area that we focus on. And the second is really about continuing to bring in new energy companies across all the new energy value chains. And so we don't want Houston to just be the oil and gas capital of the world. We want Houston to truly be the energy capital of the world. So how do we make sure that we're positioning Houston to attract and bring in existing alternative energy sources as well as new energy companies? And so the innovation effort that's happening here, a lot of the outreach, a lot of the work between traditional and new energies coming together, and then finally supporting value chains across the energy industry. And so thinking about things like natural climate solutions and the role that that plays, and thinking about LNG and clean energy in all of its different forms, and with Houston sort of being the epicenter of where energy decision-making happens, how do we make sure that this rewired energy system includes all of the right solutions to give us our best chance at achieving that low-carbon future? So that's really what the initiative is about, and I'm really pleased to have the opportunity to work with a broad group of companies and stakeholders and governments and a lot of folks with a vested interest in making sure we're successful in leading this transition and looking across lots of different issues around workforce development. How do we make sure that Houston's universities and other schools and other technical programs are positioning us to take advantage of the jobs of the future in the energy industry? How do we make sure that as we reduce emissions, we're improving the economic and social opportunities for everybody in Houston? And so looking at all of these opportunities through various lenses to make sure that we continue to make Houston a great place to live, work, and do business.
Awesome. Zach, can you tell us a little bit about Mercuria's efforts in the decarb space?
Yeah, absolutely. First off, Kay, real fantastic to be here. Thank you very much. And I had a whole intro plan, but Jane kind of covered everything I was going to say.
Sorry.
So it's fantastic. But I guess to kind of play into the theme she was mentioning around kind of the transition. So I appreciate Mercuria is not a household name, but we are a top 3 energy trader globally. So we move cargoes of oil and crude, LNG. We're active in almost all continents in power and natural gas. But what I'd share with you is that Mercuria's CEO has made a commitment that more than half of our profits will be going into the energy transition. And he made that commitment several years ago. And so now we're also standing up a $2.5 billion renewables portfolio in Europe this month. We're investing, there's some of our investor companies are here today. We're investing deeply in batteries. We're investing in CCS. So the story is it's a very traditional energy company that is deeply committed to the transition. And so my team and I in the low carbon space, we're very focused not only on equity investments, but in how do we help these markets today mature? How do we give fixed price certainty to project developers so that they can develop projects that otherwise wouldn't exist? Because a challenge today in environmental markets is they're very illiquid, they're very not transparent, and you can't just go lay off risk on the screen. And so what you need is somebody who can come in and understand the risks and the rewards of this marketplace to enable these projects to happen, whether it's nature-based solutions, so industrial scale of carbon storage in trees and soil, kelp beds, things like that. Whether it's biogas, which is, by the way, if you ever watch Dirty Jobs, I'll tell you biogas is a dirty job. It involves going to landfills and to dairies, to chicken farms, to pig farms. And any time that there's organic waste that is decomposing, it's giving off methane. So we're tinting that. Imagine a tint over it. We're off taking that gas, we're cleaning it, and then we're putting it into heavy trucks, into CNG trucks, right? And so I don't think these solutions that I just mentioned, they're not the ones that are they're not the solutions. There's so many solutions that we need. These are just a couple of them, right? But at Mercuria, we're very focused on what's actionable today, right? What is the price of carbon today? And we can talk about that quite a bit, but I would frame it up somewhere between $5 and $15 per ton is kind of the going rate of carbon. Of course, there's certain programs that price it much higher, but if we're just talking about voluntary markets, that's kind of what the world is paying, right? And so at those levels, that's what supports nature-based solutions. That's what supports biogas. And that's what supports differentiated energy, which is the idea that not all energy is created equally, right? If I have an MMBTU of gas from a very efficient well that doesn't leak methane to the atmosphere, and if I have an MMBTU from an older well that's not well maintained, that is emitting to atmosphere, in theory, there should be a price spread between those two MMBTUs. And we're starting to see that happen, in the marketplace. And so, in summary, what I say about Mercuria is we're very focused on being tactical today and doing our part in the energy transition, but at the same point in time, we're making these investments that are kind of gigaton, we hope, gigaton firms that we're investing in and gigaton technologies. And so we're trying to kind of walk that balance of what can be done today and then how can we set things up for the future. So,
awesome. Pradeep, I see MHI really approaching decarbonization from several angles. You're investing in technology, software, but also playing in development and equity investments. Can you tell us a little bit about what you see MHI doing?
Sure. So first of all, thank you very much for having me here, and thank you for the introduction. I would say I win the second prize in terms of the password that Kishore was talking about. So my last name is probably second to his in terms of password. That said, I represent a corporate function in Mitsubishi Heavy Industries called Investment and Business Development. And that kind of gives me a unique perspective in the sense, in two ways. One is I sit on the intersection of technology and investment. And the other one is Mitsubishi is a Japanese company that's operating worldwide. And Japan has a mandate towards net zero and towards hydrogen economy. And we do realize that so earlier in this morning, we were talking about how geographies matter, right? So if you think about United States and in particular Texas, you have it all, right? You've got the sun, you've got the wind, you've got oil and gas, you've got geology to sequester CO2 right here, right? Japan is not. Japan is disadvantaged. 95% of energy requirements of Japan comes from overseas, right? So it's a completely different solution. So the approach we take is to attack the problems differently. I don't know if that graphic that flashed during my introduction, you had a chance to look at it, but for the student, it's up here, okay. So if you go to flowcharts.llnl.gov, so they started making these Sankey diagrams. I like this one particular, this is pre-pandemic because of two reasons. One, it has a perfect figure of 100 quads. That's the energy consumption, primary energy consumption in the United States. But the figure that stands out there is the 67% rejected energy, right? And that's because of two reasons. One is definitely the thermodynamic efficiency. My PhD is actually in thermodynamics, so energy is always in transition, right? We talk about energy transition, but energy is always in transition. But there are two significant problems that come up here, right? One is the energy efficiency in terms of the processes. The other one is in terms of utilization, right? So although we have a lot of, you'll see that this is actually quite telling because you see that the carbon emitting energy sources actually right now, have probably 90% or 88% of the energy consumption in the United States. So we got to do several different things. We have to, in terms of achieving net zero, we have to first start off low-hanging fruits, increasing efficiency across the system. Second one is, you can't turn the big boxes small overnight. So there's a place that carbon abatement and CO2 capture and environmental solutions that Zach was talking about are going to be playing an important part. The third one is alternate fuels, right? So that's where hydrogen and ammonia and other sustainable aviation fuels come into picture. And lastly, there's need to be a system integration and to address this problem. To summarize, if we were to take off from anything from this panel today or from my participation in the panel, I've kind of put 5 I's for this, and I've written down so that I don't forget it, is, energy transition has to be driven by 5 I's. The first one is innovation, right? Innovation doesn't mean necessarily disruptive technologies. It also can mean incremental development in technologies. And so you have this continuous improvement process. The second one is investment, right? Investment has to be made in developing new technologies, but also in incremental. It could be public money, it could be private equity, but it has to be there. Without investment, innovation will not sustain, right? And then the third one is information, and that's what this institution here plays a very important role, is informing policymakers about the right paths, right? Whenever we talk about hydrogen, everyone talks about Hindenburg, and that's what the image it creates, right? But that's not true. We have been handling hydrogen for over 50 years now. I mean, we've put people on moon, using hydrogen as a fuel, right? And so there's a lot of misinformation, and in this particular era, when we have a lot of information, there's always the risk of not imparting the right information. So, educational institutions, policy institutes have a role to play here. The fourth I is actually integration, right? Any technology that you develop has to integrate seamlessly. Even if you talk about cell phone revolution, there was an infrastructure in place for that to take place. If you don't have seamless integration, that particular technology will face an uphill task for adoption. And last but not the least is the inclusion part of it. Any energy transition, or any transition for that matter, has to be inclusive in terms of providing equitable energy adoption, right, to society as well as different stakeholders. So that's the 5 I's I want everyone to take away from here. And I'll be able to talk about hydrogen and decarbonization. A lot of renewables were mentioned, and how hydrogen plays an important role in balancing is something, again, I would love to converse later today. Yeah.
Thanks, Pradeep. Jane, I'm recalling a conversation I had with a fellow developer a few years ago, kind of before the world fell apart, at the esteemed energy think tank, the Kirby Ice House. And the topic was, we were discussing hydrogen and where do you seed a value chain and succeed, and it had nothing to do with loyalties to Houston. It was pure, it was greed driven, and where do we invest time and money to succeed? And we started listing the ingredients of success. And you're talking about here, you're talking about Chicago, the Marcellus, Los Angeles, Southwest U.S., Utah. There's a lot of places, right, that have some ingredients, but all roads led back to Houston in that conversation. Can you share with us what you're seeing, those ingredients that Houston has, and how the partnership and your cause are leveraging those?
Yeah, absolutely. I think there's a significant piece of work that's being led right now from the Center for Houston's Future, which is sort of a sister entity to the Greater Houston Partnership, more of a think tank than economic development. But the Center for Houston's Future has been working to convene a very broad range of stakeholders, and I think they've probably had 150 people contributing to this piece of work to lay out a vision for why Houston makes sense as a hydrogen hub, and why that should sort of lead the way for the nation, and funding opportunities, and how that would come together, and the vision for that. And I think, there are so many different pathways to hydrogen. There's blue, there's green, there's turquoise, there's gray, there's a little bit of everything. And in Houston, there's an opportunity for all of that to come together. And with the volume of hydrogen that's being used here today, that is gray hydrogen, there's an easy opportunity to swap that out. And then when you add to that the capacity to do things like carbon capture, use, and storage here in Houston, really makes hydrogen an even easier prospect to get to in the near term than it would be in other places, where you have to develop different solutions and you don't have the same sort of infrastructure. We have CO2 pipelines in the Houston region, the Gulf Coast region. We have hydrogen pipelines in the Gulf Coast region. We have lots of power plants, we have lots of emissions, and we have lots of great geology, which allows us to sort of jumpstart the pathway to not only emissions reduction, but also hydrogen as a long-term source of energy for both. And I sort of bucket it in 2 ways: transport, hydrogen for transport, and hydrogen for industrial activity. And in Houston in particular, you have the opportunity for both. And given our proximity to the port, and the size and scale of the port, and our export activity, you can also add to that opportunity, the ability to export hydrogen for use around the world, particularly in places like Japan. And so you can start to see how all of these pieces here in Houston really fit together in thinking about, and then add in the renewables activity that's happening in West Texas, and you can start to see how you then phase into your green hydrogen solutions and leveraging all of that wind energy and all of that solar energy out in West Texas. And you really have, to a certain extent, like we've said, everything is here, all the pieces are here. You just have to get the right regulatory and policy regime. And I think the challenge with hydrogen is figuring out the demand market. With CCUS, it was a little bit easier. You know who's creating the emissions, and you know where you're going to put the emissions if you can store them. With hydrogen, we're still not exactly sure what the use cases will be in all circumstances. I think, people have a good sense. Heavy trucking on the transportation side, probably more likely than individual vehicles, although there is a bit of a market for that in California. Heavy equipment in the port, shipping, there are transport aspects to it, and then there's also the industrial aspects, using it as a replacement fuel and clean energy for the plastics industry, some of the other big heavy industries that are here. And so you can see how if you can get the right pathways jump-started, and you get the right companies working together and the right partnerships, you can see how this would start to come together into a real solution for Houston.
Yeah, no, I appreciate that, and that's where I want to go next. Is actually the demand side, and both Zach and Pradeep, I'd like to get your perspectives on that as well, just from your unique angles. Right now the supply side of decarb is what's sexy, and it's what's being talked about. 60 gigawatt project in South Texas, the Apex project in the West is looking pretty. That's an interesting development, and that's what you hear about. But none of these are enabled until somebody's actually buying a product at the end use, right? And so, Pradeep, I'll ask you, kind of at a global level, how do you see the demand side product formations that are impactful, and how do they grow, and kind of give a little bit of a geographic prospectus on that? And then Zach, we'll pivot to you and kind of because Mercuria is very near-term transactional, like what's happening now?
Absolutely.
Right. So let's start with Pradeep.
So yeah, thanks, Dave. Actually, I want to add some numbers to what Jane was saying, that almost, the current global production of hydrogen is about 90 million metric tons, and of which 10 million metric tons in the United States, and about 4 million metric tons right here in the Gulf Coast, right? And this is all the merchant hydrogen, most of it is here, and the consumption goes primarily in two main sectors. One goes in refinery. So it depends where you are, but in the United States, most of the hydrogen either goes in ammonia or in upgrade, right? So when you think about from a demand side, let's take a global picture, right? And economies like Japan and South Korea have already made commitments. There's also mandates to they have coal-fired power plants. 20% of them have to be, 20% ammonia co-firing in coal power plant. So where is that ammonia going to come from, right? And so hydrogen, again, is part of that value chain. So a lot of people mistake about hydrogen being, transported as liquid hydrogen around the world, or, how are we going to do it, right? But hydrogen, even if it's not in its native form, in some form, it's entering the energy value chain even today, and will continue to do so. If you think about sustainable aviation fuels, which is again a very big demand side because of COSIA having these mandates, it's essentially if you have vegetable-based oil, or if you are doing it using RWGS in CO2 to X, you need hydrogen for that. So these are the supply side demands of hydrogen, even from a global perspective, but also domestically, right? If you talk about United Airlines, they're talking about having sustainable aviation fuels. Almost all major airlines are talking about that. But hydrogen is part of it. It's not just vegetable oil or soy that's going in there, right? The other part that's overlooked is that hydrogen can play a very critical role, especially in the United States, and I'll come back to Texas there, is balancing the renewables, right? There's a lot of talk about renewables this morning, and if you see the scale at which renewables growing, there's not enough battery capacity for seasonal curtailment, right? That's a classic example, the duck curves and the seasonal curtailment from West Coast. And one of the examples that from Mitsubishi side is the Advanced Clean Energy Storage project in Utah, where essentially you have a salt dome, and just to paint a visual, each of the salt dome is kind of size of Empire State Building, and it can store about 150,000 megawatt hour of power, essentially. And it's going to be in form of hydrogen. Right? So when you have this curtailed electricity, you produce hydrogen and then you compress it and store it underground. And when the peak demand happens, you can combust this hydrogen, so clean combustion, and regenerate the electricity, right? But think about that. We are in Houston also sitting on top of a lot of salt domes, right? So, and we are thinking about increasing capacity in Texas itself. So hydrogen essentially is going to play a role in that side, from a demand side, on balancing the renewables. And if you want to counter it in terms of battery, the same amount of energy storage, if you want to do it in terms of battery, you would need 3 Empire State buildings stacked over top of one another. That's the amount of battery storage you would require to meet the same demand. So hydrogen, essentially, if you have the right geology, would be very critical, serving as a giant battery for energy storage. So these are some very, very niche uses for hydrogen that I see as from a demand side globally, as well as in particular use cases.
Do you see some regions around the globe moving first and others being followers?
I think there's already movement. You see Europe thinking very seriously about hydrogen, and China as well. I mean, before the pandemic happened, Wuhan was supposed to be, the showcase hydrogen city for the Beijing Olympics, right? And so China is definitely thinking a lot about hydrogen in terms of energy security itself. And then economies like Japan and Korea have already made commitments to become hydrogen economies by 2050. So the movement's already there. And there's going to be a different energy map by 2050. I'm not an astrologer. I cannot speculate how it would turn out because world events change things. But definitely there's going to be a different energy map by 2050, where you will see countries like Chile and Australia being providers of these energy sources to Asia Pacific.
Yeah, sounds like where you're saying the first movers are places that currently don't actually have abundant natural resources of their own as first movers, which stands to reason, right? Yeah. Zach, what do you see in the present, in the near term that is transacting now?
Yeah, for sure. I'll get super tactical here. What I shared with you is part of Mercuria. So I started around BP's low carbon team in North America. The same thing I'm doing at Mercuria. And the reason I'm sharing that with you is that during that point in time, we became the largest supplier of compliance-grade instruments to many Houston companies who are covered, whether it's in California or in Quebec or in the Northeast United States. And so that sounds great, like, okay, we were the largest in those markets, but consider for a second that if you look at all the regulated markets globally, whether it's New Zealand, the EU ETS, Alberta, Cali, Quebec, all these things, you're maybe covering, and this is my guess, by the way, because I haven't seen the math on this, you're maybe covering 5 to 7% of global emissions and energy consumption, however you want to look at that. So that's not very impactful, right? But I tell you what I think is impactful, and it's my favorite statistic from this year. So I was at a conference with the S&P 500 in Q1 in Scottsdale, Arizona, and Standard & Poor's presented. And Standard & Poor's put people to work going through all the net zero pledges that have been made in recent time, right? So there's a ton in the past 2-3 years. By Standard & Poor's math, 80% of energy is now covered by net zero pledges. Now, there's big questions about that, right? The slope of those pledges, the delivery of those pledges. But to bring it back to your question, David, about what's going to drive action, right? What's going to bring these? Because this has been the problem for some time in environmental markets, is that it's good to talk about, but when it comes time to write a check, right, that really hasn't been happening, right? And so I'm sure many of you are up to speed on the Securities and Exchange Commission and some of the discussion that they had in Q1 around proposed rules. And so those rules, if you're not familiar, it's 2 things. One is standardizing GHG reporting for publicly traded companies. The second part of the rule is if you have a net zero pledge, you need to articulate what that is. You need to disclose that in your 10Ks, right? And so if you think about that for a second, and it may, in some circles it's controversial. I'm not here to kind of, get on either side of that stuff. But what I'll say is that the largest asset managers, so like Vanguard, Fidelity, these guys who are managing trillions in assets, are pushing the SEC to do this, right? And they're also pushing companies to do this. And essentially the SEC is saying, if you're not transparent about these things, we're not going to bid your stock up, right? That's what's coming out of the trillion-dollar managers. And so I think my prediction, and I hate to be overly optimistic here, but my prediction is that that's going to spur some action. And even if those rules are challenged, which I'm sure they will be, I'm sure they are being, my prediction is that half or 2/3 of the S&P 500 is going to adopt those rules anyway, simply because their C-suite is incentivized off of stock price, PE ratios, right? So what I would say is, yeah, I think, look, we're in a new era. I've been at this for 15 years now. We're in a very new place, but I'd still say there's more talk than checks getting written. I think policies like these, I think the bit I just walked through is the most impactful thing that's happened since I've been in this space. And it's going to be interesting to see, to bring it back to Houston for a second and the role that we have to play. One of the things that I think is interesting is if you look at companies like Microsoft or Shopify, they are defining these products, right? They're defining the products that companies need to consume to meet their net zero goals. And they're being challenged, but they've also got some great ideas. And so what I would say about that is that there's a void to be filled here. And so my concern as an energy guy, I've been at this before this as a power guy at Calpine, ERCOT, and so been energy all my life. But I would like to see the energy complex be more proactive in defining what these products are and what these pathways are, which is one of the reasons I'm so glad everyone is here, because I think, I think the cumulative intellectual capital that's in this room and in Houston is probably better placed to think about these things than perhaps other entities, right? But to put a bow on that, though, David, I would just say the interest that we've seen in voluntary markets is up 300 or 400% over the past couple of years. It's tremendous. But we were starting at such a small place, it's still de minimis, right? And so I hope some of these structural things evolve.
So what pigeonholed you a little bit as a near-term concern? What do you guys look like? What does a Mercuria look like in 5 or 10 years?
Yeah, so we're making substantial equity investments in CCS, in satellite technology to monitor carbon stocks on the ground, in biofuels, in batteries, in different chemistry companies, and mining companies for lithium and nickel and cadmium, right? And so our view is, guys like me are very tactically focused, but the view inside Mercuria, and this is coming from the top, from Marco Dunnand, who's the CEO, his view is that in 10 years, 80% of Mercuria is low carbon focused, right? And this is a very commercial firm, right? I mean, we're a good steward, I believe, of the environment and ethically, but what I'll also say is it's very commercial. And the view within Mercuria is that this is not only the right thing to do, but it's also a way to do well while doing well.
Awesome. Jane, I know you've had a whirlwind 3.5 months in your new role in the city, and this might not be fair to ask you yet, but have you guys kind of thought about what are the success metrics that you guys are looking at to know 1 year, 5 years, 10 years, if we're succeeding?
Yeah, absolutely. I think we can point to some other plans that exist in the region, in terms of the city's climate action plan, and there will soon be a Harris County climate action plan as well. But seeing meaningful progress be made against those objectives. When the city sets a climate action plan, there's very little actually within that climate action plan that the city itself can implement and impact. The vast majority of the emissions that are created in the city are coming from all of us who live and work and do business in the city, not from the actual city operations themselves. So they can do what they can do, but they've set goals like to have 50 new Energy 2.0 startup companies in Houston by 2025. And as of this year, 2022, they're already at 64. So you can see how in some areas we're making massive progress. And those are the sort of metrics that give us indications that we will find ways to move forward on the transition. I think, seeing big, impactful, meaningful projects by the big energy majors in partnership, either with other energy players, with other industries, and with cities, I think is another area where if I was going to look for a success factor, it would be to see, a big plastics recycling project happen here. It would be to see a meaningful CCUS project that is tied to a hydrogen hub, and really starting to see that Gulf Coast region become, and the ship channel really become a carbon management hub. And we start thinking about carbon management as part of our energy delivery process. And so seeing some of those big projects come together, I think, in the next 5 years, and that's pretty challenging when you think about the time it takes to actually get a project built and up and running, much less go through the permitting process that folks were talking about a bit earlier, which really has been one of the things that's held up progress so far. But if we can get some of those things worked out and really start to see some meaningful projects come together, you start to see things like renewables and energy storage companies doing things together. You start to see things like traditional incumbent oil and gas companies reaching across the border to, renewable energy companies to say, how do we accelerate this? Can natural gas and renewables work together to accelerate the transition until we have things like hydrogen? And so for me, seeing partnerships that wouldn't have existed otherwise is probably the biggest metric of activity. And then the level of investment that happens here in Houston. Oddly enough, between 2019 and 2021, the level of investment in startups in Houston increased fourfold, from like $120 million to over $650 million in a 2-year period in the midst of a pandemic. There is definite desire to move this forward and to keep the transition moving. And so I think, seeing those investment dollars flow here, making sure that we've got early stage seed funding for research here, making sure that we've got a pathway for PhD students with really great technology solutions into Greentown Labs, into the ION, and then into these Houston-based companies that will deliver and develop those technology solutions. Seeing those pathways and partnerships exist would be what I would say would be the big metrics for me.
Cool. Well, I think we're going to end on a fun note, and then we'll transition to questions. So this one's for you, Pradeep. So we've got a lot of technologies. My company is deploying several lithium-ion technologies, and the electrolyzers look like they're ready for prime time. There's the liquid air and the compressed air, and so we know what's in the commercial space right now. What do you see technology-wise that is coming down the pipe that may be game-changing and impactful?
Oh, that's a tough question.
I know.
But before I answer that question, let me actually say something that Zach raised, right? So 15 years ago, environmental stewardship for a company meant effluent treatment, planting trees and having, clear up highways, right?
Sure.
That has changed, right? That has changed significantly. And one of the key things that you need to remember is energy transition now is not driven by either fear of peak oil, or it's not driven by Clean Air Act or pollution and smog. It's actually driven by shareholders. It's actually driven by a generational change in thought. And in the investor market, rightly as you pointed out, and that's a key change. Be it hydrogen, be it CCUS, be it investment in renewables. So it is for real, right? So for all the skeptics out there, I just want to say that this time around, hydrogen is not a hype. I started off my PhD project on hydrogen storage when President Bush said that the child born today would drive the first vehicle as a fuel cell car, right? But that didn't happen, right? Because of shale boom and everything else. And so we have gone through these cycles where we've talked about hydrogen and other solutions because of other reasons, but this time around it's different and it's for real, and that's why we are all here and we are all talking about this. So to answer your question, David, on what the technology of future would be, I don't have an answer to that. But I do see a lot of different solutions on the horizon. To the point that Jane made is that energy transition is not something that an app that you could download and click on a few buttons and solve it. There's an aspect of it where you can actually manage your energy efficiency in a building. But it's hard tech. It has to be built. It has to be, steel and cement and many moving parts, right? So, and for when we're talking about how equitable and job creations and how people from Houston energy industry would transition, they have a role to play because there's plenty of current experience in rotary equipment. There's plenty of knowledge of geology of carbon storage or hydrogen storage, salt cavern. So we can actually leverage and build on that in addition to the tech that we have developed in the city. So to end on a fun note, that you wanted to, is that the technology of future is something that we don't know. Let's all keep guessing, right? Who's going to be the winner, right? So.
Gotcha. All right. Well, I guess we'll go to questions then. Where's the mics?
Talk. Okay, thank you. Yeah, I have two questions actually. One, you mentioned earlier about bioenergy. How much CO2 you get there?
How much do you avoid? So the way
CO2 to methane.
Yeah, well, so it's a hotly debated topic. So it used to be that we thought the equivalent, the GWP, global warming potential of methane, was about 20x on a mass basis of CO2. About 20 was what was being said about 5 years ago. Today, we're seeing numbers closer to 80.
80% CO2?
No, 80x. So like 1 ton of methane has the effect, is what some of the research is saying, of 80 tons of CO2.
Santa Maria.
Indeed.
Now, the second question, I've always been interested in storing, by the way, I worked on hydrogen, liquefied hydrogen, everything. And you said you did the research, PhD research on storage. Can you talk a little bit about your storage tank? About your storage, whatever, how you store it?
So if you think about hydrogen value chain, the problem is not how we produce it or how we actually use it, right? We all know how to do that today. If you go to a refinery, the gas turbines are burning hydrogen as part of the off gas that comes out of refinery. Yeah, mixed with gas. So both you and fuel cells have been around for a long time too. So we know how to use hydrogen. We know how to produce hydrogen. The problem is in the storage and transportation part of it. That's the biggest bottleneck in the hydrogen value chain. And there are plenty of solutions that are being explored. And maybe to answer Dave's question, is that's where the innovation needs to be. But depends on use cases and value chains, to answer your question specifically. If you think about balancing renewables, then salt caverns, you pressurize hydrogen and store it in a salt cavern.
No leaks.
Again?
No leaks.
No leaks.
Well, you have to, so even if hydrogen leaks to the atmosphere, it's not like methane leaking out, right? It's different. But you need to, so again, that's a job for geologists to look at, right, the seal cap, the seals and the caps, reservoir caps, identify the right geology for storage of hydrogen. If you think about liquid transport of hydrogen, again, you can think about three different vectors for now. Ammonia, you can think about liquid organic hydrocarbons, and then you can think about methanol and other fuels like that, which can actually be vectors for hydrogen. So you can leverage existing infrastructure using these solutions. But it depends completely on the use case. It's not a single solution to this one. Yeah.
Thank you.
Yeah, I had a question.
Gentlemen.
We've been talking about the generation side, and there's some about the transmission side. There's also the consumption side of energy. I think we can agree that dropping in renewables is going to be, with storage, is still going to be pretty different from the energy generation we have today. What do you think is going to happen in the next 5, 10, 15 years as to consumers of energy? What are they going to have to change? What sort of things are they going to need to do differently?
Well, I'll take one stab at it, and this is just a sliver, but we're seeing a lot of utilities today request capability to rate base things like biogas or things like differentiated energy to lower the carbon intensity of the methane that's used at your house or whatever. But what's interesting about that, I mean, it's not actually a consumer activity, right? I mean, it's what the utilities are delivering presumably to the public. So. But I think for me, it's a sea change, though, to see public utility commissions and organizations like NARUC, the National Association of Utility Commissioners, contemplating these kinds of programs, which ultimately are for consumers.
So I'll answer that question slightly differently, right? So it has to be 5 years, 10 years down the lane. It has to be a change in attitude of users as well, right? And if we have to teach our kids to turn off lights and fans when they get out of their room. No, seriously, if you saw that diagram there, it's about the energy efficiency, right? So that's a big problem. So we need to change our attitude. There were complaints when we talked about the Texas storm, but you could see downtown, a lot of buildings were still lit up at night, right? And so that's a serious problem that we have. So there has to be a change in attitude, but there's also, if we cannot help it, technology will help it, right? Because yesterday, so today's Earth Day, right, and we're having this conversation, I got an email from Nest saying that, I participate in a program and it gives me $50 if, I'm able to, and it will adjust the thermostat in my house automatically if I'm not, I'm too lazy to do that. So those kind of solutions are also going to happen over time.
Just to add, I have this philosophy that the further away you are from the source of whatever it is you use, the less worried you are about efficiency, right? We've moved to single-serve packaging for pretty much any kind of food product, because that's the easiest thing for us to pick up. And as long as that energy shows up, and when you turn your light switch on, you don't know where it comes from, you don't, what that source is and what the implications are, you don't think about it. The closer we can get to bringing energy generation to the public, the more likely they will be to be thoughtful about how they use that resource. You see it if you do have a backup generator and the power goes out in a hurricane and you're using your backup power generator, you are much more aware of the energy that you're using, and you make a lot of choices to make sure you don't have to go to the gas station 4 times and, or you're not having to pay for natural gas at an outrageous rate. But the closer that power generation gets to you as an individual and gets to the public, the more thoughtful people get about using it. And I think the same is true about all sustainability type things. And so I love this idea of if we can start to think about microgrids and dispersed generation, and in every region will need different solutions to meet their needs. And so you could see how when that starts to get closer, people will start to think differently about the way they use those resources.
I can kind of recount one of the think tank conversations with, you have developers and traders all kind of bannering this around as far as when you think about high degrees of electrification, and these new plants that are being built are very high in the fixed costs and very low in the variable costs. And if you extrapolate that construct out over time, you get to a place where, energy is, other than very small number of hours a year, it's pretty abundantly available, and you start to think about electricity as a service very similar to what your cell phone looks like, where you're not actually paying for independent electrons. It's just like, hey, free text and data. for $69.95 a month kind of a thing. And that may be how we, for some of these assets, how do you get to revenue certainty? Because a lot of the plants in Texas have nothing that even remotely resembles revenue certainty right now. But if it's heavily CapEx intensive and not a lot of OpEx, you could kind of see that playing out over time. 10 years from now, again, you might just be paying a fixed monthly rate for unlimited electricity.
Okay, that's a great point. And I would just add, consumer activity, we're all very price driven in America, right? It's what we do, huh? And the problem with your retail energy consumption is there's no price signal, right? And so maybe Nest, maybe they put in an option where you can put in a carbon price, right?
Yeah.
And then maybe you'd be more aware, I don't know.
And so actually very, very interesting point, right? We are thinking about these concepts where you can actually, when you buy Tide off the shelf, there's a barcode and you can scan it and it tells you the carbon intensity of the product. So that's a different platform. I will talk about it. Not here to make a sales pitch, but definitely those kind of solutions will. And I don't know if anyone has been to Chipotle and bought a burrito from Chipotle. When you do that, it tells you how much energy you saved and how much carbon you saved. People do not pay attention to that, but please pay attention to that, and that kind of is probably making public more aware from a retail consumerism, right?
See Herman back there. I hope it's not for me.
It's not going to be for you. Do you think carbon storage will actually happen if we don't have a carbon fee or a carbon tax at the federal level? Because there's a lot of talk, but there's not an incentive to put it together.
Yeah, I absolutely 100% think that carbon capture, it's already happening. It's been happening for 25 years in the US for EOR. And with the level of incentive that is there today, and I worked on the National Petroleum Council study on carbon capture, use, and storage, so I'll point back to a couple things there. There are projects that would move forward today, even in the current 45Q environment, the current level of incentives, if we could actually get the regulatory certainty and the pathways to do it. But when it is going to take 6 years to get a permit to store CO2 underground, and there's only ever been one issued, and you're an investor, you're very unlikely to make the investment in something that you don't know if it's ever really going to happen or not. And so I think the incentives are important in the long term for really big things to move, but I think more important is we have to get the regulatory framework in place in order to enable those sorts of projects to move forward. And then I think, people have a way of making the right partnerships come together and the right business opportunities come together. I see things happening in Europe and most of it is government funded. Eventually governments run out of money. And my perspective is, Houston is where you want to see these things come together, because then they're commercially viable projects, because these are commercial businesses that have shareholders and that have long-term ambitions. And so when you can see companies like Chevron, like Shell, like ExxonMobil, like BP, working together to try to figure out how to make some big projects happen, they'll figure out how to make it commercially viable.
So sort of building off that similar question, I was wondering, how do you guys think about different countries, right? So Norway has a $60 carbon metric ton, while US 40, Singapore 3. If a company will operate in different regions, does that mean they get competitive advantage? And how do you make citizens of a certain country pay? Is there a fair way to do it? Or is this something, a company itself can do?
Yeah, I can take a stab at it. Look, I think it's a great question because it does relate to the CCS question very well, right? It's actually what I was thinking. Because if you are a multinational firm, right, you have those exposures, right? And so just because we're not pricing carbon in a certain geography doesn't mean that others aren't, right? And if you're multinational, you may have exposure to that pricing, right? And so, yeah, I'm aware of a couple majors today that are working on CCS projects here in the Gulf Coast to mitigate exposures that they have overseas. So that's happening. The velocity of that, it's been slow, fair enough, right? And then the other piece of this is, when you hear about, what's the word, border adjustments, I think, right? So if you're landing a tanker of crude into a country that does have a carbon price and the production country didn't, you'll be grossed up in many cases. So it's not perfect. It's not totally efficient. But yeah, I do believe those mechanisms, whether it's in New Zealand or Australia or EU ETS, do have a trickle-down effect. And I think one of the traps for the energy industry, particularly here in the U.S., is, we need to understand that stuff is not going away, right? And so we need to start being super proactive, whether or not that regulation happens here, because it's certainly happening other places.
So carbon arbitrage is for real, right? That's going to happen. And companies more often are global, operating in different geographies. So it's both advantages and disadvantages. So there are traps there, but there's also positives where you could actually use some of these, carbon arbitrage based on the geology of the area.
And I believe that's a big reason why a lot of these bigger energy companies have moved past the conversation completely and said this is a competitiveness issue in the long term. This isn't about what anybody's particular position is on climate. This isn't about what anybody's particular position is on whether you think renewables make sense versus fossil. This is about how do you maintain your global competitiveness in the long term. And so all of the above solutions and transitions from within the industry are really what we're seeing happen, because regardless of whether or not the U.S. ever has a price on carbon, and regardless of how that plays out, if you want to be competitive in the global market, you have to think about how your product stacks up against those other available products.
Wouldn't the price of hydrogen through electrolysis be competitive with reforming of methane?
Should I take that answer? So as of today, if you think about reforming of methane without carbon capture, you have somewhere $1 to $2 per kg from SMR. And a CCS would probably add 25% cost to that. So let's say $2 per kg. So for electrolysis to be competitive, it has to be in that range. But then again, when you think about an energy value chain, can't just think about the production aspect of it. By the time it gets to, say, if you're fueling your car, your Toyota Mirai, in California, probably paying $16 per kg of hydrogen, right? So it's not just the generation part. You have to take view of the entire value chain, and there are opportunities to reduce cost along the way. So, did I answer your question? Oh, you want a timeline? Okay, timeline depends. So renewable costs are coming down like crazy, right? So CapEx is only one part of electrolysis. There's utilization factor and capacity factor. So right now, a lot of innovations being done in terms of increasing the efficiencies as well as the capacity factor. And so you would see that in at least 5 to 10 years, cost parity. DOE has the 1-1-1 challenge, right? So $1 per kg of hydrogen in 1 decade is the DOE challenge. So, and earlier, the last panel, if you want to remember the conversion, 1 kg of hydrogen essentially carries the same amount of energy as 1 gallon of gasoline. So think about it that way.
Yeah, I'm not sure if this is going to help you because I'm switching products here, but when you talk about things getting cheaper over time, I bought into a solar project in 2010, and the electricity price, all-in electricity price of it was $154 a megawatt hour, and deals are getting done right now in the mid 20s. So that a 10-year decline curve that looks like that in terms of the infrastructure side, and the batteries have been following a real similar pattern of cost efficiencies. So based on what I see on electrolyzers themselves, I don't see any reason why that technology won't follow the same patterns. Now that's a little bit different because the things I've been talking about are all equipment. there's still the electricity that goes into them. There's a variable cost on this that you have to address, right? Nobody in here that has a wind farm wants to give that electricity away. And, you know, I mean, half the value of the hydrogen right now is capital recovery on the equipment. The other half right now, call it, you know, the energy consumption. So that's something that has to get solved differently than the solar and the battery equation. Lunch? Nope. Nope.
Almost had it.
Can you comment real quick on the role of offsets in the energy mix?
Yeah, absolutely. So I was going to talk the other day actually to the University of Houston, no disrespect to Rice, but I was asked to summarize the Paris Accord in the context of your question. And the way I summarize the Paris Accord is there's kind of three pillars that were agreed upon. You know, one is energy efficiency and lower carbon intensity energy being consumed. The second pillar is offsets, primarily from nature-based solutions, and the third pillar is CCS, right? And so the reason I share that, though, is when you do the math, when you solve for it, right, the conclusion is typically that you absolutely need offsets in this mix, right? And it's fair that not all offsets are created equally. It's also fair that in the past, there were some problems with those markets, right? But I would argue with any market, you've had problems at some point, right? I don't care what the market was. And so I would say today the level of robustness that's going into offsets, in part because of the level of scrutiny that they've gotten, is better than it's ever been. And the other thing I'd share with you is that I mentioned, for example, we're investing in satellite firms, right? One of the reasons we're doing that is we're now starting to do our carbon inventories of forests and trees remotely and every month, right? We used to have an individual go out there and actually pull a tape measure on trees, for example. But the reason I share that with you is to give you a sense of how much more robust these programs have become over time. And so, yeah, it's when you look at, and it's a question that I think the S&P should be asking, 500 should be asking themselves, is when they make these net zero pledges, how are they ever going to get there without offsets? And by my reckoning, they're not going to get there without offsets. So I think it's a critical piece going forward.
I think COP26, Article 6, Article 5, Article 6, has actually done a lot to further this.
It's very true.
Yeah.
Which basically says that we should be transacting carbon across borders, right? Which, you know, is interesting to think about it because every other form of energy requires money to transport, right? But of course, there's no transport of CO2. So we should be very active in finding the lowest cost abatement areas, whether that's in Peru or whether that's in South Africa or wherever.
Zambia.
Zambia, which is what Article 6 says, yeah.
And with that, box lunches.